In January, Eskom revealed it expected load shedding to occur on 62 days, or 70% of the next 3 months. This has left most of us, as well as some economists as well, the entire nation grappling with the implication for South Africa's growth rate. HSBC downgraded South Africa's growth expectations to 1.6%. It's the most dramatic downgrade we've seen so far. They're blaming the lack of electricity, but the answers aren't uniform. This is Tonight. I'm Bruce Whitfield, and tonight I'm joined by Chris Becker, lead economist and strategist at African Alliance Capital Markets. He's just been on a whirlwind tour of London with some of the biggest fund managers. In our Cape Town studios, we're joined by John Orford, portfolio manager at Old Mutual Investment Group, to find out whether or not darkness will become our new best friend, but ultimately what it is costing us. HSBC, Chris Becker, too negative, 1.6% growth. That's the most bearish view I've seen so far this year. Or are they slap bang in the ballpark for now?
Look, I think they might actually be a little bit optimistic. I've been quite bearish on growth for a while now. Since mid-2013, I've been talking about a weak rand that's going to impact growth very negatively. And that we've pretty much seen playing out up until now. Manufacturers are under a lot of pressure. Export markets aren't particularly strong. And now you lump into the mix Eskom's crisis, productivity losses as a result of it, and a lot of households and businesses having to spend on things that we shouldn't be spending on at this point, while the government on the other side is trying to raise, or will be raising taxes effectively, or utility costs, to expand and reinvest in utility infrastructure that should have been done in the last 20 years. So in the short term, growth, I think, is going to be very bearish, very negative.
Could we go into recession?
Tito
Mboweni recently on Twitter tried to get hold of him to chat to him directly. He declined, but he was talking about recession.
So I don't think it's out of the realm of possibility. I think it's very possible.
Let's pause there for a second. John Orford, Chris Becker, Tito Mboweni, are they on the lunatic fringe of bearishness?
I think that we're actually quite a lot more optimistic about the outlook than that. I think that the electricity, the load shedding is a problem, and there's obviously the risk that it becomes more severe if they don't get a handle on things. But I think we need to remember it's happening in the context of a significant fall in the oil price, which other things being equal, is providing a big offset to consumers. It's putting money back in their pockets. It's also going to see inflation come down pretty smartly through this year, and as a result, real income growth is going to be nicely positive. So, yes, load shedding is a negative, and it's a risk, but I think there's a powerful offset from the oil. I think the key thing to watch will be how it impacts confidence, and clearly that's the thing to watch, business and consumer confidence, and whether load shedding results in job losses.
But that's so crucial, isn't it, John?
Our base case.
I mean, it's so crucial, isn't it? Because it's about the psychology of load shedding. It almost doesn't matter what it does economically. Okay, sorry, John Orford. We'll sort that out while I talk to Chris Becker. It's about the psychology. It's about whether you and I decide to invest. It's about whether or not we decide to expand our building, whether or not we decide to expand our business, whether or not we decide to stay in the country, for goodness sake. Depends on our feeling of well-being and our trust that there's a resolution at the end of a dark tunnel.
For sure, and that's amongst local businesses and households. The sense I get from foreign investors at this point is that South African growth is weak, and yes, as John points out, there is going to be somewhat of a kicker of a lower oil price to households. But
the rest of the world gets that.
The rest of the world gets it as well.
We become less and less competitive in a global economy that is benefiting from the same low oil price.
Yeah, so East Africa, for instance, Kenya specifically, I think growth can accelerate from levels of 4% in real terms towards levels of 6 or 7%. So they're going to benefit a lot more from this than South Africa does, for instance. So the issue right now is still a structurally weak growth environment. So we might get a bit of a benefit of a low oil price this year. But my sense is that foreign investors are looking at South Africa and saying the market's run exceptionally hard. It's done pretty well. In this kind of environment, is it a market that we want to be allocating more capital to? So firstly, there's a risk of domestic capital flights out of South Africa, as well as people actually leaving South Africa, because my sense is sentiment has gotten really bad this time around, which obviously is a risk to cyclical growth and also longer term growth. But right now, because South Africa runs a significant budget deficit as well as a current account deficit, we need foreign capital to be flowing into this economy to keep things sustained. If capital flows out or doesn't come in, South Africa's growth is going to going to slow down quite dramatically, and I think that's the risk from here.
Your comments on the fact that Chris Becker says, it's all well and good that there's this benefit from oil, but there is the psychological impact of load shedding and the fact that foreign investors simply have got other and better options right now.
Yeah, look, I mean, if we look at what foreign investors did, they were quite big sellers of South African assets through last year. This year they've turned buyers again, and the flows are very difficult to predict. But I think the backdrop, certainly at the fixed income market for that, is a massive QE program announced by the ECB. Likely further stimulus from Japan, a number of emerging markets beginning to cut interest rates. So this provides an environment in which South African bond yields, although they've rallied pretty hard from the start of last year to where we are now, they still offer a substantial carry over developed market bond yields in nominal and in real terms.
For now, John Orford, that may be true. For now, that may be true, but what we've seen, yes, there were some nice bond flows that came through in January. Then suddenly some really good jobs numbers, 3 months of really good jobs numbers, 1 million jobs created in the United States, wage inflation beginning to come into the picture in the United States. And suddenly we once again in this tit for tat, are we going to see US interest rates rise or not? And that suddenly leads to bond flows out of the country once again. We're just too blimmin' vulnerable, aren't we?
I think that that argument's going to remain live through the course of the year. The reality for the US is that the economy is growing fairly healthily, although it's probably going to slow down from the most recent rates, but it's going to be pretty healthy. But I think that the rest of the world is in not great shape. US bond yields look like a good investment if you're sitting in Germany with close to 0% bond yields. So there's going to be quite a decent support for the long end of the US bond market. So it probably will move up a bit on the base case, but again, not something that should be too dramatic. I mean, obviously we'll have to see what happens with the US economy, and the wage data will be the key to watch. We've only really seen a recent small uptick, and it's probably not yet at the level that would push the Fed to an aggressive tightening. But sure, rates probably will go up at some point in later this year in the US. I think that...
Sorry, John. It feels, Chris Becker, very gloomy. It feels very negative. Short term, we're investing money we shouldn't have to be investing on, whether you want to take yourself off the grid as a community, whether you want to take yourself off the grid as a business, whether you want to take yourself off the grid as a home owner. You're taking capital that could be deployed elsewhere, either to service debt or into other assets. Businesses are doing it. Big businesses are doing it. Government is being forced to do it because it can't rely on its own state utility to do it. So short term, that's a cash sapping anti-growth move, isn't it?
That's the big drain that's happening on the private sector at this point, spending money on things that we shouldn't be spending on. As you point out, government's also ramping up its expenditure. Where's it going to get the money from the private sector? So a big drain that's happening on the private sector at this point. But there's an upside to all of this. And that's that, like you say, some communities, like the community I live in Parkhurst, we are going off the grid. So we're going to be making substantial investments as a community to move off the grid, to get our own solar supplies, to have water purification plant. The water crisis is probably the next big thing that's going to hit South Africa.
Don't tell Edna Muller, she doesn't believe so. Yes.
Businesses, our companies just put up, African Alliance has just put up a new building.
They call it a building. It's called a building, yes.
In Ilovo, our own water purification plants, generators. So effectively, the kind of environment that South Africa is moving into is a more robust, decentralized electricity and water supply environment. So, over the long term, it's going to be a lot more sustainable, more robust to external shocks, and more robust and less prone to government's errors and maintenance, lack of maintenance of infrastructure.
But you've got to survive the 2 or 3 years while you get that in place.
So that's the short term, the near term growth concern that I've got. So
you're forecasting we could go into recession this year, though.
Yeah. Also, just to get back to John's point, so I agree with him. I think I've been probably the only economist who's been predicting rate cuts in South Africa since September. The kind of environment that we are in and that we continue to move into is disinflationary, weak growth, and I think the Reserve Bank's going to be cutting interest rates.
But what is the consequence then for the currency, though? Because then you see this widening gap with the United States, and again, capital flows at risk.
So the rand's actually been strengthening against the euro and the pound in the last 2 years, year and a half possibly. It's been weakening against the dollar. In trade-weighted terms, the rand's not actually weakening. It's a function of this currency wars that John spoke about earlier. It's breaking out all over the place. I think the Fed's going to join back, and they're going to join the party again. And if they stay away for too long, it's going to cause some major dislocations at a global level, capital flow level. So I think they're going to come back not for economic reasons, but also very technical monetary policy implication reasons. I don't think they're actually going to be able to lift the Fed funds rate.
Okay, short-term pain for long-term gain. That's your base case?
Short-term pain for long-term gain in terms of the development of a robust and decentralized water and power infrastructure. But ultimately, all of this money printing and the money that continues to flow into SA to finance current account deficits, it fuels a cyclical and unsustainable boom that also at some point is going to have to unwind. So there's pockets of healthy growth and there's going to be pockets of unhealthy growth.
John Orford, let's wrap with you then. Your view then for 2015, that's the year that we're in. Chris Becker was saying that HSBC at 1.6% was optimistic. Are you as negative? Can you be as negative? Or does your base case remain actually the year will be nice and stumbly?
You know, I think that if I look at our economist forecast, we're at the optimistic end. So we're expecting growth to pick up this year and to be well ahead of that HSBC number. And a lot of that pickup is on the back of a consumer which benefits from the oil, which we've talked about, the low interest rate environment, etc. Clearly, I think on the electricity side, the longer it goes on, and if the problems aren't arrested, that will begin to certainly dim that outlook. And I think longer term, even if people are able to go off the grid, it's certainly true that we're at one of those tipping points where politicians need to sort of grasp the nettle here and deal with the problems. Because trend growth in South Africa has certainly been coming down from, perhaps it was up at 3.5%, maybe even 4%, according to the central bank estimates in the mid-2000s. It's certainly probably somewhere closer to 2.5%, maybe even a bit lower than that. And unless we arrest some of these problems on the supply side, trend growth can hardly pick up. So I think that one must separate out the near term, where we can certainly get a bounce in consumer spending off a relatively low level because of very supportive near-term factors, and the longer term, where unless obviously we address the Eskom and other issues, our trend growth will continue to sip, which suggests that the rand could benefit this year, and on a trade-weighted basis, it has been doing reasonably well. Longer term, to get more bullish, we'd have to see some of these problems being dealt with more seriously. And there's some signs in government that it is being taken more seriously. Heavy hitters have been put in charge of the Eskom issue in Cyril Ramaphosa. Some of the murmurs we hear around the so-called war room, a nice name for how it's being managed in Eskom, do suggest that they're dealing with some of the day-to-day problems quite effectively.
John Orford in Cape Town, thank you very much. I have to cut you, I'm afraid. John Orford, sorry, we need to be able to see each other. John Orford is with the Old Mutual Investment Group. He's a portfolio manager there. And Chris Becker, lead economist and strategist at African Alliance Capital Markets. Thank you very much for coming in. Nice to see you. He was bearish in the short term, is Chris Becker, but John Orford is telling him to be calm and carry on. It'll all be fine, courtesy of a lower oil price, provided that is sustained. You get a bit more cash in your pocket. Will it be enough, though, to placate you when you're waiting to watch Tonight with Bruce Whitfield and there is no power? Some of you might even be grateful. Thanks for watching. There'll be more tonight, tomorrow, provided the power stays on. Good night.